This is Andrew Stotz of Stotz Investment Research, and today I'm going to be looking at what academia says about why U.S. companies are holding so much cash these days. Take a look at this chart. This is an accumulation of all the companies in the U.S. stock market. And what we can see is that in 1995, U.S. companies held about 4% of assets as cash. But by 2016, that's risen to 11%. Now, considerable academic research has tried to answer this question, and I would say, after reading through most of it, none of it's really fully convincing to me. So let's go through this. I looked at 12 relevant academic papers. On my website, becomeabetterinvestor.net, I list out and have the links to all of them, but this gives you an idea. In 1999, there was a paper called The Determinants and Implication of Corporate Cash Holdings. 2007, corporate governance, could that explain it? 2007 again, is it about tax causing it? For instance, the tax rate outside versus the tax rate inside the U.S. 2009, why do U.S. firms hold so much cash? Right? 2009, also trying to ask that question and answer it. Is it about financial constraints, investment? 2012, we had two papers, and then 2013 came this idea of intangible capital. 2013 was also asking the same exact question. And 2014, is it about refinancing risk? Is that why they're holding so much cash? And then 2016, this guy, Daniel, has done something for his PhD dissertation, talking about U.S. repatriation, that's it, of taxes and how that's impacting U.S. companies. And then, again, another one out of Korea. So, what does it come down to? There are six, or as they say in China, six reasons for coming from this academic research. The agency problem, tax repatriation issue, refinancing risk, high R&D and rising intangible assets, falling inventory and capex, and companies with high volatility of cash flow. So let's take a look. Agency, what does it mean? Well, entrenched managers of firms with poor investment opportunities prefer to hold more cash than pay it out as dividends. Also, entrenched managers tend to spend this excess cash more quickly. So there was a couple different papers with some different findings, but to me, this is unlikely to explain the rise in the cash levels on aggregate across all the companies. The next one, repatriation issue. Well, the U.S. government taxes the difference of the tax rate on profits a U.S. company earned in a foreign country when that company repatriates the funds to the U.S. parent. Now, if a company has earned large profits, let's say in its Irish subsidiary, and that's taxed at 5% rather than the 35%, let's say, in the U.S., the 30% difference is only paid when the company actually brings that cash back to the U.S. So U.S. companies tend to keep these funds outside of U.S., and it ends up that they hoard a lot of cash, waiting. Maybe the government will give them a tax break at some point. This is one of the issues that comes up. I don't think it explains why, on aggregate, U.S. companies are holding more cash. Next one is refinancing risks. One paper showed that companies that would find it hard or costly to refinance their short-term debt tended to hold elevated levels of cash. Now, to me, this seems pretty obvious, and it's unlikely to be what drove this shift in the overall total market to cash levels. Now, this one's kind of interesting, high R&D and rising intangibles. So some research claims that the rising cash in the U.S. was concentrated in companies and industries that had high R&D costs and also high levels of intangible assets. Think about software companies. Now, because banks prefer to lend based on tangible assets, real assets as collateral, these companies can be starved out of funding, and hence they need to maintain a high level of cash. Now, this, I would argue, is probably correlated with cash levels, but is it the cause of higher cash levels? My answer to that is I believe that that's unlikely. So the next one is falling inventory and capex. Some research shows that the fall in inventory and capital expenditures from the 80s to 2006 caused companies to accumulate cash. Yeah, it's a simple and apparent reason, but it does not convince me that it's the cause of the rising cash level. But definitely there's a correlation. And last one is companies with high volatility of cash flow tend to hold more cash. Companies that have high volatile cash flows tend to hold excess cash as a buffer against periods when cash flow is low. Makes sense, but it's too narrowly focused on this subset of companies to me to explain why on aggregate companies in the US massively increase their cash holdings. So we have 6 potential arguments for it: agency, repatriation tax issue, refinancing, high R&D, rising intangible assets, falling inventory and capex, and companies with high volatility.